Hey guys, welcome to today's session. It's a pleasure to be here as always. I'm going to give everybody a moment to join before we jump into things today. Going to be a relatively chilled one today. Just going to take a look at markets, have a bit of an overview of what's been moving over the past couple of weeks since the beginning of January. Talk about some positions that I'm in and managing at the moment, and we'll take it from there. And as always, it will be kind of an open-ended Q&A. So if you have any questions as we go through the session, feel free to put them in the comment box. Maestro, how are we doing, dude? Hope you're all good, my friend. Hope you're all good. I'm currently watching a position that I'm in on the Nasdaq. Entered pretty much on New York Open. Straight into drawdown. It is a negative risk-reward system that I'm trading, hence why the TP and the stop loss are so far apart. It does have, I believe, a 70 or 80% win rate. If I open it up, we'll take a look. 78% win rate, 80% to the short side, or 80.5%, I should say, to the short side, which is why I'm okay with trading this with a negative risk to reward system. It is a simple breakout strategy that only takes trades within certain trading hours of the day, pretty much running up until the New York Open. And I've been trading this for, I think this was the first strategy implemented into XAQP. Like the very, very first system. It's had some changes and some renditions along the way. More recently this week, myself and Blaine got our heads together and tried to improve the strategy a little bit more. And one of the main things that we did was shorten the time window where it executes. And it's a lot more robust as a system now. There's kind of a fine line between over-optimizing a strategy and kind of adapting it for current market conditions, or at least future-proofing it for future market conditions, I would say, is probably the better term. And it's, I think we was explaining this in yesterday's session, is if I bring up Quant Analyzer a second, where is it? So if I bring up this a moment. So if you was in yesterday's session, you'll remember I was talking about over-optimization and overfitting a system to kind of your back-tested data or your history that you're testing on. Now, when you're looking at something like reducing the time window that strategy will trade in, of course you can go, okay, well, let's bring it up. So if we go trade analysis, so we can go P&L by the hour. Okay, so I'm quite lucky. This is my portfolio overall, or at least in the current state of the portfolio. You can see it's pretty much profitable every hour historically, other than 11 p.m. at night, which is fair. It's probably due to rollover and getting spiked out on a couple of trades during that period. But we're pretty much green across the board. Now, if we had something sticking out, like, or let's say it's 50-50, I'll tell you what I'll do is I'll try and find like this. Okay. In fact, it's probably not the best example. Yeah, let's go with this. So this is a single strategy. It's a breakout strategy I have on euro dollar. Now, if we look at this, it performs fairly consistently here, has an hour of the day that, you know, over the past 8 years hasn't performed. Then we have a couple of green bars again. We have a really bad hour, a couple of green bars, bad hour, a couple of green bars, bad hour, a few green bars. Now, if I was to go, well, I tell you what, I'm just going to stop it trading during that hour, that hour, that hour, and that hour. Leave it open for the rest. All I'm doing there is overfitting the strategy for the period of data that I have right now, which is the past 8 years, right? Whereas, for example, if I'm looking at I don't know, a Nasdaq system like my breakout on the NDX I'm talking about, where we know there is an injection of volatility due to the US market open, and we reduce the trading window to those specific hours, like right before the New York Open into the New York session. We know there's a logical reason for reducing that trading period. Okay, whereas if I just start taking out trading hours just because it's been bad in the past, all I'm doing is getting a perfect backtesting report, because I'm essentially looking at ways to remove all of the losses, from the period of time that I'm looking at. Okay, but the market was around before my backtesting period, and it's going to be around after. So it's truly really important, especially as an algorithmic trader, that you don't over-optimize and overfit your strategies to the periods that you're testing now, which is why it's so important to go over in-sample data, out-of-sample data, and all of those things. Maestro, do you have a time stop too, or just set and forget? I think this is I don't think this has a time stop. What I'll do. I'll bring strategy. I don't think it has a time stop. It doesn't usually need one, purely based on the fact that so it doesn't have a time-based stop, but because of the nature of the strategy, because the target is quite small, it doesn't usually need one. So what's the average hold time for this? I don't think I've got it logged on here. No, I haven't got it logged on here. I'd have to do the actual test. But either way, the average holding time of the strategy isn't a lot. Usually it's like 1 or 2 hours. So you can see here that was 2:30, 3 o'clock, and we're now only an hour on, right? So these are 5-minute bars. I should probably put that back on the H1. I usually watch on the H1. So there we go. So it's usually like if you look at the ATR of these H1 candles, it's usually like 1 or 2, especially on market open, which is usually when this strategy will enter. It used to trade with pending orders, so I used to have sell stops and buy stops in there, which worked okay, and I've never had any issues with it. But with the new rendition with the time window, what I did was I changed it to manual execution as well, because with pending orders, if the market absolutely tanks, you're going to get slippage, and spread might blow out slightly. I do have spread filters in there to mitigate that anyway, and you might get tagged on the bid price instead of the ask price, and there's a load of things that you kind of don't want the stop order left in there for. So at least with the manual execution, it will do all of the checks before it clips the trade. Whereas with the buy stop and sell stop, that it does the checks, like it might do the checks, I don't know, 5 hours ago, but it enters the trade now because the order's been in since it did its checks. Danny J, can you post your last interviews tickers from last night just so I can have an oogle? Cheers. Yeah, so Blaine, who was on the session last night, wasn't an interview. He will be joining us every Tuesday because Blaine now works for Darwinex. So he's joined my team at Darwinex, which is the UK and US growth team. So he will be a regular attendee to these sessions, most likely on the Tuesday sessions at least, because Blaine, like me, is a algorithmic trader. He builds automated portfolios. And this is his ticker, IME. This is his ticker. Tal, how are we doing, my friend? How are we doing? Tal said, Kieran, if you get 75% all-time high before 27th of April, I will put XAQP as a tattoo on me. And Maestro, I'll name my kid XAQP. XAPQ, is that? I'm presuming that's a typo. You're not taking the mic. Yeah, so the Darwin that's on screen now, this is Blaine's Darwin. Again, for those who were in the session yesterday, you might have missed my explanation at the beginning of the session. Blaine has joined our team at Darwinex as a UK growth associate, so he's helping me with the growth team for the UK and the US. He's a fantastic addition to the team because, like me, he uses the product. Blaine has been around for 2.5 years, I believe. 2 years, sorry, 2 years. Trained with Darwinex, and he's actually the person who introduced me to developing portfolios or algorithmic portfolios. So I owe a lot to Blaine, and it's great to have him in the Darwinex team. And hopefully he brings a lot of value to our Tuesday sessions, which are now all about strategy development, strategy building, using FX Dreamer and Strategy Quant, and just kind of formulating ideas, getting pen to paper, and then testing them as well. We might bring in some kind of interactivity to those sessions as well, where we do some stuff like maybe we all build a Darwin together, or we build some strategies and you guys can have access to those strategies. Obviously, there's going to be issues with correlation, so it's going to be, you'd need to put it as part of the portfolio, but we're going to try and do some fun stuff with those sessions. When is the strategy session? So it was yesterday, so you'll be able to watch the recording of it on our YouTube channel. You just go to the live tab, and whether you're on Darwinex, Darwinex Zero, or my personal YouTube channel, it'll be on any three of them as I stream across all three. So you'll be able to go and watch yesterday's session on there, and then we'll be doing it every Tuesday moving forward, the strategy development stuff anyway. Maestro, Blaine was interviewing Kieran. Maestro, any plans relating to US growth that are in the works? In terms of in terms of market penetration, yes, we want to get more traders from the US. In terms of like infrastructure and regulatory progress, no, it's not really a priority. It's too difficult. Like the US is a difficult country for us to enter as a CFD provider to then kind of set up base there. However, Darwinex Zero is a fantastic product for US based traders because there's not many alternatives for you guys out there, which is kind of a shame, but it is what it is. Tail, could you explain this, how to find it? What do you mean, dude? How to find what? This does show if you invest using the same account on Darwinex Classic. Okay. So you're asking about what I mentioned in the Discord earlier. So for example, if we take a look at Blaine's Darwin for now. So the question is based on something that we discussed in Discord earlier, I believe. Tal, correct me if I'm wrong. And somebody asked how you could see one's investment into their own Darwin. So for example, if we take a look at Blaine's here, if you hover over this little magnifying glass, you'll see it says trading account equity and trader's investment in IME. Now, the trading account equity is obviously if the trader is trading with their own live capital, that will display here. I believe you can hide that. So the trader has the option to hide their equity. So it would just say that, yes, they have capital invested. However, it's kind of blocked out. And then trader's investment in IME, if you self-invest through the same account, or if you're a Darwinex Zero Darwin and you sign into Darwinex with your Darwinex Zero username and password, and then you invest into your own Darwin, it will show in the bottom line here. So it shows whether you're trading that capital or have invested through your Darwin. Global flows, I'm in the US. The US Darwinex is fantastic. Appreciate that. It's great to hear. I mean, it's unfortunate, right? Because we would love to get the asset management side out into the US as well, but that is a big task. Like asset management in the US is, oh God, gives me shivers even thinking about it. Your show zero, you're scamming me. Yeah, so I had to pull mine out for tax because I had a massive blunder. So I had a 4K payout on XAQP. Where are we? I had this payout, 4,002 euros, which was about 3,800. And what I did was I withdrew it to my personal account, and then I sent it to my business account, which is designed, like I built my business to trade through and take trading profits, or at least performance fees. And then I bought Strategy Quant, and I also paid for my IMC qualification through the business. Now, I've spoken to my accountant, and he said, yeah, you can't really do that. You can't retrospectively add the transaction to a business, and therefore that has to be classed as personal income. So what I've done is I've taken the remaining 1,800 that was in XAQP is all for tax, because I'm a higher rate taxpayer, which means any income that I have, it's like 40%. Goes to Mr. Taxman, which isn't fun, but it is what it is. So I basically put the 40% I had left away for the Taxman, essentially. But I'm waiting for my corporate account to get reviewed. So I've got another investor account open with Darwinex, but I'm KYCing as my business so that I can invest back into XAQP through my business. The only issue is those accounts won't be linked to XAQP, so it's not going to show that I have invested into it. However, I can always show you on the back end. So, but yeah, I am scamming you anyway. Yeah, simple as that. Rob, how are we doing, my friend? Hope you're all good. So anyway, today's session is going to be a bit of an interesting one for me because I don't really look at the markets too much anymore. I understand what's happening. I know where we are with things purely based on the fact that I have charts open all day, every day, and I trade so many assets. So I kind of understand where flows are going. So today, obviously, I'm short NASDAQ. I know the strategies that I have on NASDAQ. And if I'm short, that basically means that the market is tanked. Again, for the guys who weren't here when I was talking about this system at the beginning, whilst it is a negative risk to reward system, it has an 80% strike rate to the downside. So happy to let this run for now. Let's take a look across the board. S&P is down almost 1%. NASDAQ down 1.5%. We are trading from all-time highs as well, right? Gold up almost 1%. Silver up another 6%. I mean, this is just wild. let's take a look at silver on the daily. I have made a ton of percentage gain on my Darwin from this silver rally over the past couple of months because I have a couple of breakout systems, and this is the kind of market where breakout strategies will just absolutely cake it day in, day out. Again, I think I mentioned yesterday, I saw a video recently, somebody talking about breakout strategies and how they don't work, or how they've never met a successful trader who trades breakout systems. What I would argue to that is breakouts are probably one of the easiest systems to get working, especially as an algorithmic trader, because all the variables are kind of fixed. They are all there. Now, what I mean by that is if we say, we want a breakout of 100 bars. Okay, now that is a fixed variable no matter where you are, no matter what the price is. Let's make this bigger. So our strategy might be breakout of 100 bars, depending on the time frame that you're on. Now that is a fixed variable that remains the same regardless of whether we're over here on 15th of January 2026, whether we're in 30th of April 2025, so on and so forth, whether we're at $29, whether we're at $91, like it doesn't matter. You will always have a previous 100 bars. Therefore, those variables remain the same. Now, with breakouts, and Blaine said it perfectly yesterday, for a breakout criteria to be met, it's just simply that price is moving for one side or another. Okay, so obviously we have a range or we have a trending market. Okay, now what's happening with a trending market? We're having breakouts because the market is moving in that direction. So to say that breakout strategies don't work, and I used to believe that as well, is very, very naive. It's probably one of the better strategies that you can have, especially in a portfolio mixed with some mean reversion stuff, so that you're tackling all market conditions. But like I say, I've seen even the index, right? If we load up the index a sec. If you think about the volatility that the index has had over the past, that the markets has had over the past couple of years, and then we just see how well the index has performed. Now, bearing in mind, from 2020 till July 2025, this was ran live. So that's a 5-year record, ran live on our proprietary capital. So we ran it behind the scenes with Darwinex only cash. We then opened it to the public in July 2025, and it's had basically better performance since then, if we exclude the year of 2021, than it ever has done before. Now, what's interesting is the volatility has also been higher. So we also see a massive correlation with US indices and metals. So when metals rally, we tend to get a huge rally on the index because we have a lot of traders long on gold, long on silver, long on the NASDAQ, long S&P. And a lot of these traders are trading breakouts, right? Again, very, very simple sort of system. We have breakouts of highs, and then we buy the breakout. I used to be under the illusion that if you was buying high, then you're an idiot, okay? But there's so much more nuance to it than that. And to be completely honest, some of the breakout systems that I have are some of the best systems that I've got overall in the portfolio. So I said, I find Darwinex Classic not as clear as I would want. Below the chart, I see Jan 6.17% in profit, but I have P&L 2.89. Let me check because you've sent me that on Discord. Below the chart, I see Jan 6.1%. Your leverage 2x, that's why. But the above chart, I have open P&L 2.89. Oh, open P&L is what you have open right now. So open profit. Yeah, that look, is it? That looks about right, I think. I know how much equity you have. Yeah, I'm sure open P&L is what's open at any given time, which would make sense because we're in 2 profitable positions. Do you have investments into other Darwins as well, or just into your own? Or sorry, just into XAQP? It's defo just XAQP. I can see from the equity and stuff. But yeah, Darwinex is something that we're planning this year. the Darwinex platform. We want to make it more simple. There's going to be some changes coming to Darwinex. I would say it's kind of been neglected over the past couple of years with the rise of Darwinex Zero and how that's grown. Darwinex has kind of taken a backseat, especially with the index being released and stuff. But I think this year we're going to give some love and care to Darwinex and try and make it as user-friendly as possible. Only my doodle. Yeah, XAQP for life, right? XAQP for life. So yeah, open P&L. Invested, overgot. Yeah. Yeah, it looks like that's your open positions. 2.72%. That's a lot though. It shouldn't be that much, surely. 3 point. I don't know. No, it sounds about right. I think the Nasdaq is pulling back now. Yeah. But okay. So silver's up another 6%, just casually as it is. Hit $92 per ounce. Gold past 4,600. It's crazy to think that this time last year, where were we? So Jan to Jan. This time last year, gold was priced at 2,600. Like it's a whole $2,000 more expensive, which is just crazy. I mean, it's not the craziest thing in the world. Like it's been one of those things that's just been grinding and grinding and grinding. So it's not been crazy from like an intraday perspective. It's just the fact, like the power of this move is just unbelievable. Meanwhile, we've got crypto still below this area. So this is kind of the key area that I'd be looking at here. I'd want to see price reclaim back above 98.3, at least on Bitcoin, just to see some momentum to the upside. It looks like we might get a test of that today. That, for me, is kind of a key area of what we're looking at the moment. All-time highs, where are we? All-time highs. Bitcoin is another asset that just absolutely cakes on breakouts strategies. Like you can build so many great strategies on Bitcoin and Ethereum specifically for breakouts. I just don't purely, or I have, but I don't implement them because I can't trade crypto on XAQP, which is a shame, but it is what it is. It's funny how similar this price action and this price action looks. Ethereum up 1.33%. If I remember right, yesterday was a massive day for alts. Do we have alt market cap? We don't. Let's just take a look at Sol. Let's just Sol up yesterday. 4.5%. That's not crazy. Nothing crazy. Individual stocks getting smashed pretty hard. Minus 2% for Nvidia, -1 for Apple, 0.65 for Google. Did everyone see the news yesterday? I think that, I mean, it's kind of baffling, but at the same time, I get why. Apple have announced that Google, that they're going to be using Google's Gemini for Apple's Meta Intelligence. Basically meaning that the way I interpret this is Apple are that far behind on AI development that they're just basically giving into Google and onboarding Gemini. Gemini is fantastic. I much prefer it to ChatGPT and Grok and other LLMs that I've used. Claude is obviously fantastic for coding, but Gemini for copywriting and everyday tasks I think is fantastic. And it seems that Apple have kind of capitulated the same way that Samsung have and are onboarding Google. I mean, I suppose it does make sense if somebody else has a great product that can, enhance yours, then fantastic. Great news for Google because they're kind of integrated with one of the biggest companies in the world alongside, I mean, Google is what, number 3? Apple being number 2, I believe. I could be wrong on that. So having Apple, utilize you in such a way is, especially with AI and the AI bubble / AI hype, is just fantastic. I recently moved from Apple to Google. I now have a Google Pixel 10. User experience wise, it's not as good as an Apple. It's not as good as an iPhone. However, value for every pound I put in, this is about half the price of an iPhone. It smashes Apple out the wall. Absolutely smashes them out the park. However, an Apple device, in my opinion, is better. Yeah, Maestro, Pixel Gang. Pixel is fantastic. I still think the user experience of Apple is far better, but the problem is with that is Apple spent so many years in my opinion, Apple spent years and years and years improving their user experience, which didn't need to be improved because they was already number one, whilst all the other companies were building AI and testing with new things. And that's kind of brought the gap down massively. And now when you look at an iPhone compared to a Pixel, for example, or new Samsung phones, you go, well, they have everything. It's just an iPhone feels better. And eventually that's going to wear out or they'll catch up, in my opinion. iPhones are for simplicity. The software is quite good. Yeah, 100%. 100%. I read something the other day and it was on about Tim Cook, the CEO of Apple, and basically saying how good he's been for the company, that he's one of the, the better CEOs to have ever lived, yada, yada. The biggest issue that he's had in his career is that he was late to the AI bubble, and it could be the downfall of Apple. Who knows? XAQP, baby. Yeah. Started gold, account sick, then up 9.3K. Nice. Crypto is absolute bonkers. Kudos to those who can trade it. I used to trade crypto back in the day. I was actually, about 3 or 4 years ago, I was a complete degenerate. So I traded like low cap DeFi coins that had liquidity of like 10 grand. I was like the biggest player in those markets sometimes. But I remember when my first, I was gonna say first daughter, I've only got one daughter. When my daughter was born 5 years ago, so it must have been even longer than that. It must be talking 4 or 5 years ago, is when the Binance Smart Chain DeFi bubble kind of exploded. And I remember there was nights where I would go into my office and the missus would be in bed because obviously we had a newborn, so she was shattered. She'd go to sleep, and I'd go in my office, and this would be like 10, 11 p.m. at night, and I would just start trading these liquid coins that had just launched 5 minutes ago. And I would go into her and wake her up and be like, "Oh, babe, I've just made 5 grand. Like I've just put $100 into this liquid coin. It's ran up and I've made 5 grand and pulled it out." Like it was just a bonkers time. But I genuinely feel in that time, it aged me so many years because the stress of making money in such a short space of time as a young person who's never really been in money, it's so difficult. And so these days I avoid crypto as much as I possibly can. I did my time with crypto. Back to the stocks. I actually bought this the other day, Rocket Lab. So this was a total fluke, right? Total fluke. I did some research. So for those of you who know who Think are, it's a friend of mine, David Bell. He runs the Think Academy. They specialize in building a stock portfolio and investing long term. I did a course. He gave me access to his course probably about a year ago. I did the content in it. It's absolutely fantastic. I'm a complete newbie to investing, so I went in there with an open mind. Got to treat it different to trading, and there was only a few filters that he told me to look for, which I implemented. Now I didn't buy too much of this because I was just it was kind of my test play where I started to use what I'd learned. Where are we? Where's my average, my cost? So I bought here on, does it tell me the date that I bought? Your market buy was on the 15th of December. So 15th of December. So I bought on this day, this big red day there. So what I had was one of the filters was looking near the 52 weeks high and low. Oh, let's forget. So at the time, you can see it's made a new all-time high today. This specific stock has. So the line is over here, but at the time it was here. So it was near the 52-week high. So it was near the yearly high. Volume had increased. So I basically put a filter on Robinhood to notify me of any stocks above a certain market cap. I think $2 billion was the minimum market cap that I'd put in. Volume to have increased by 3 times, I think, or 2.5x or 3x of its average volume for the past 30 days, so that I know if something's getting traded a lot more than it usually is. And then the final thing, which is a little bit of like confirmation, was the previous week it needed to be up, as you can see over here. So I wanted to see that it had been moving up with that volume, because volume on its own is kind of a bland indicator, if you will, because there's no way of saying, like, we could say, well, the volume has tripled, but it could be due to the CEO was, you know, assassinated by his chief of staff, and therefore the company shut down, and therefore the volume has increased because everybody sold their shares, right? So it's important to then understand the context behind that. Why has the volume increased? So I wanted to see the market been moving up, and then I wanted to see a down day. Ticked all the boxes. So I bought on this day, and then ever since it's just been rallying. Unleveraged, I didn't put enough in as what's his name? Oh, what's his name from the Wolf of Wall Street? Oh, gosh, someone help me out. What's the guy's name? Jordan Belfort. As Jordan Belfort, or at least Leonardo DiCaprio's depiction of Jordan Belfort says, the only problem is that you didn't buy more. That's exactly my problem here. It's been a pretty easy ride thus far. And yeah, so we'll see. Jordan Belfort. Yeah, there we go. XAQP's ass. I still think XAQP is the Herbalife of D0. I mean, let's take a look. Does this look Herbalife to you? There was a big Herbalife cult by me 10 years ago, 15 years ago, doing events all the time. You'd see them everywhere. I spoke to Javi the other day as well. He's going to do a breakdown for me. He says it looks possible for me to get into index because I'm uncorrelated with a lot of the diamonds in there, which is fantastic. So hopefully within the next month, I'll be in index. 49 out of 553 in gold. It's fantastic. What's great about this is, I mean, I've had a pretty strong month, 3.25% for January so far, and yet I'm 49th. And I put that down to metals. Like, the guys above, not saying everybody above me has just been trading metals, but usually it's so hard to climb up the ranks when metals are rallying or NASDAQ is rallying. It's so difficult. So usually what you see is if gold has a pullback or if precious metals have a pullback, the leaderboard kind of collapses, or at least some of the leaderboard collapses. But first month in gold, if we can close somewhere around here, number 49, maybe higher, even slightly lower, below 100 for the first month, I'll be super, super happy with that. Rob, when SPWL is back in green, we'll have to meet again. XAQP is asked, mate. Well done. At least someone overtook me. Yeah, absolutely. We'll go for another coffee soon, dude. Absolutely. I expect to see SPWL back up and running very, very, very soon. Let's take a look. SPWL. NASDAQ looks like it's moving again. Yeah, this is exactly what we want to see. Keep going, baby. SPWL. I mean, people are still allocating to you, which is a real good sign. Maybe some people had pending orders on you. If you've never invested in a Darwin before, essentially what you can do is you can either like market execute. You're basically trading the Darwin as if it's like an ETF or an asset, right? So you can either market execute, so you get in at the current quote. So if the quote is on, for example, XAQP, the quote is 140.71. That is the price you buy the asset at. If that goes to 141, then great, you made a profit. If the quote goes down to 140, then you're down 0.72 points. It does translate to percentages, but the quote is kind of what it's all based on. You can set limit orders or stop orders on quote. So if I said, I want to buy a pullback on XAQP, average drawdown is probably about 2. I'd say my average drawdown is probably 2%. So I'm just going to put a limit order at 137, 138 or something, 2% below current quote. So it just, you stick your limit order in, same way you would with crypto stocks trading, and it will just trigger as the quote goes down or goes up to that point. Tal said, "Go all in," is what I hear you say. Absolutely not. I cannot say that on stream. Absolutely not. Never go all in. I'm a bit late, but are all in index is what an index, dude. Alexa, turn my Gobi lamp on. Okay. A little bit dark in here. There we go. Technology, great. Are all in index not correlated? So some strategies are correlated. Of course, we have over 200 people included in the index as of right now. So obviously, between those, they're all trading similar assets. Well, they're not all trading similar assets, but some are trading similar assets, some trading similar styles, some trading similar time horizons. We have some scalpers, martingalers, swing traders, day traders, whatever you may think. But what we do to manage the correlation between them is I couldn't download Epic Pen the other day, which is the pen that I used to draw on my screen. So I've had to start using Paint again. So bear with me. I'm going to try and do it with Paint. Good old Paint. So what we do is we would go individual VAR. So let's say the trader has their own individual VAR. We would manage that. Oh, let's go like this. So let's say these traders are all of our gold traders, right? So all of these traders have exposure to gold. I mean, this is rough, and there might be more traders, there might be less. This is just as an example. So we're managing their VAR on an individual trader level. But to manage the correlation, what we also do is we manage their VAR as a group. Go group VAR. So the reason we do this is, so like recently where the index has rallied due to the metals rally, and of course there's probably a concentration in traders who are trading metals purely based on the recent price action and the fact that it's a highly traded asset within Darwinex and majority of trading platforms. We group all of the traders who have exposure to that, so we try and capitalize on the upside. As that exposure grows, we then start shaving off the exposure at index level. So not at the trader level, not on the individual level, but at the group level. We start removing our exposure so that we kind of cap the downside, because if we're still massively exposed to the upside, because everybody in the group is, and then if gold collapses the following day, of course, the index is going to be 100% correlated with the gold market. So we try and implement two ways of measuring the VAR, individual level and group level. I don't really know if that's answered your question, but I think it's important to know that anyway. Maestro, yeah, sometimes the messages do come in a little bit delayed, but I am also probably reading them a little bit delayed also. Tell Kieran, I will be your DD Tahiti to your XAQP. You're just like what do they call it? You're like a troll, but a good troll. Like you just troll me 24/7, but in like a fun way. I'd much rather that than you be. I was gonna call you a swear word, but best not do it on the stream. Like yesterday, we had somebody come in the session, and they were like, "This is a joke of a company. These guys are streaming out of their closets," and I'm like, A, does this look like a closet to you? And B, like, where do you expect us to be in the New York Stock Exchange? Like, doesn't make sense. If you don't want to watch the stream, don't watch the stream. You know who he is, right? Probably some idiot. Kieran saw a nice ash yesterday. Huh? Kieran saw a nice ash yesterday. I feel like I should know what you're referencing there. Rob said, the down curve on mine, how long do you think it will be until it's less noticeable? Because it will happen eventually, I reckon a few years at least. I don't worry too much about it, dude, honestly. Some idiot lol, look him up real quick. Oh, Didi Tahiti. I thought you meant the person who I was talking about being in the session yesterday. Sorry, Didi Tahiti. What on earth? This is so random. It's Crypto Boy. The Crypto Boy. It definitely looks like a pawn up top. It just looks like it'll get on my nerves. But let's load up SPWL again, Rob. SPWL. Also, how's it feel, Tal? You sat watching a stream now, and I'm just making you money. I'm just making you money whilst you're not even working. How does that feel, dude? So I mean, I'll be honest, it's not good, right? Like, I won't sugarcoat it. That the drop off is concerning, because you went from 33 to 25% pretty much overnight. Of course, that's always going to be of concern. However, as we move forward, you'll see, I'm trying to think of, who do I know? Trying to think of somebody who's had a steep drop off and then recovered. IHXJ. Let's take a look at Vinesh. I'm sure Vinesh had a similar. Vinesh has never really recovered, which is a shame. He was also somebody who I know was talking about it earlier in the Discord, was affected by the interview curse. And you know, you can see he had pretty steep drop-offs as well. It kind of, I mean, if he was continuing to move higher here, then it would probably look less relevant. The problem with Vinesh is he's never breached his all-time high. You kind of don't want to fall into that trap. So I wouldn't try and force a recovery. Let it happen naturally. Take the best trades that you know how you've been doing for the past year on SPWL. Like, don't change something just because of this, which is kind of what I tried to say to you last year, right? Who else do I know that's had like sort of a steep drop off? MQOH hasn't, but I feel like I need to show you this, Darwin, because it's just absolutely phenomenal. Like, in fact, no, perfect example. Absolutely perfect example. Max drawdown 11%. So MQOH currently managing $1 million in investor capital, 95% return with a less than 12% drawdown, 2.5 year track record almost. Just fantastic Darwin. Probably one of the best, if not the best, Darwinex Zero Darwins that there is, I would say. Like, absolutely fantastic. But if we look at this in isolation over here, can't really make it much bigger. Like, there's a 10% drawdown there, and there's also pretty much almost a 13% drawdown there at the time. So it went from a 29% return down to 16. It's probably less than 10% actually, due to the compounding. Those at the time would have looked absolutely gross. So how do I zoom out? What's the option for me to zoom out? Not there. Great. Well, this is broke, so I can't zoom out. Fantastic. At the time, it probably looked a lot more dramatic than it does now. Especially this drop off here. Like, I mean, at the time, he probably felt the way that you did, but he's recovered. And now looking back, like, it's kind of like a small blip, right? I think even I had a period like that over here. Like, that felt massive at the time. It was only like 3 or 4%, but it still feels big at the time. As soon as you've outgrown it, it kind of just becomes a memory. So again, like, as you recover and move back up, it will just become less important. What I wouldn't want to happen now, and this is a concern, and it's similar to what Vinesh has seen, is just a period of stagnation. Like, if you stagnate here for a year before you start breaking all-time highs, that's a bit of a concern. Not because you've had a year in stagnation. Every trader has that. The issue there shows that you were performing really well. You had one bad day, and then that bad day looks like it was the catalyst for a year in stagnation. So it looks like you lost your marbles, and you just, you know, couldn't get anything working after that. Which is why, as much as it pains me to say, a quick recovery is usually better for optics. Although it does look sort of martingale. So I remember having a conversation with Deanna Cole, another fantastic Darwin. Dr. Deanna Cole, clinical psychologist, power user, Darwinex, fantastic person. Got a lot of love and a lot of time for Deanna. I remember talking to her, I think on the day that she had this drawdown, which return goes from 40% to 32.6%. And she kind of said to me, she was like, I've lost my head today. I've made mistakes, shouldn't have done it, yada, yada, yada. A couple of days later, I checked back on her record and she's back at all-time highs. And I was like, do you know what? I don't know how she recovered in that way. And she did the same over here. Like, I don't kind of want to know, but for optics, it looks fantastic because it shows that, like, having that bad day hasn't phased her moving forward. The worst thing that can happen, in my opinion, is after a huge drawdown or a huge losing day, you have a massive period of stagnation. That's kind of the worst thing for optics, if you will. NASDAQ looks like it's moving. There we go, baby. Come on. Okay. Gaspar, LQGP. I'm presuming you're asking me to do an analysis of your Darwin. All I'm going to say is tomorrow's session is dedicated to analyzing Darwin. So please, if you want your Darwin analyzed, come back to tomorrow's session. We start at 4 p.m. UK time, so the same time as today. If you get there early, I will do your Darwin first thing. I'll take a quick look now. As long as there's like 6 months history or sufficient data. Yeah, so we can take a look at this, absolutely. But what I like to do is I like to give these Darwin reviews the time that they deserve. So I'd like to sit down at least for 30, 40 minutes on a single Darwin and go through, all the different metrics that we have to see if there's anything standing out in terms of recommendations that I could have or things that you could improve on. So yeah, all I'll say is come back tomorrow and we'll do a review of LQGP tomorrow. Is there an email notification when you are entered into index? I believe there is. I think you get some. I think you get an email when you're entered into Darwinex Labs. I know I had one last week, and I think you get one. I think I wrote it actually, or at least I proofread it. So usually all the English communications have to get proofread by me, purely because I'm one of the only English speakers at the company. In fact, now we have Blaine. I'm like one of 3 native English speakers at Darwinex. The rest are, of course, Spanish, and we have some French, some Italian and stuff. So yeah, you do get an email when you're entered into the index. Rob, thanks, man. Also, your Discord, the ass I showed you yesterday. Discord. Oh, Rob's talking about this. XAQP. XAQP tattoos. Maybe one day I'll get an XAQP tattoo. I just know that if I do that, that's when we're going to see a huge drawdown. Risk 1%. Is there a limit on Darwin which can reach gold? Find it hard to reach 20% in almost a year. What do you mean by a limit? Do you mean like a limit on how many Darwins can be in gold, or a limit on the time it takes to get you there? Like, what do you mean by that? As Maestro says, it does get easier as time goes on. So if you don't get to gold within the first year, then within 2 years you have to make a 25% return. Okay, so instead of an additional 20% return, it's an additional 5%, and then I think after 3 years, I think it's 30%. Here we go. NASDAQ's about to hit target, and jobs are good. And for some reason, my FTMO accounts haven't taken that NASDAQ trade, which is slightly concerning. Slightly concerning. Bar 100 risk. I wonder why that is. So my FTMO phase ones were sat at if I drag it over, 9% yesterday, but today you can see they're back at like 8% on both of them, about 8%. These are phase 1 challenges, but they haven't taken all of the trades, which is strange. So I have I have XAQP, which is here. I have LVFZ, which is here, which is my second Darwin. Seems to have had some recovery today, which is nice. And then my FTMO accounts trade both of all of the strategies between both portfolios. As you can see, there's a hell of a lot. However, it's not been taking the trade today, which is really frustrating. So there's a CAD yen buy that should be in. There's a CAD yen buy here that's in drawdown. So I need to do some analysis on why this is happening, but it is what it is. It's nothing to bore you with now. But yeah, NASDAQ has just hit target. We are in Euro Yen shorts. The stop has been trailed. So this is a system that has an active trading stop. It's quite aggressive, really. It starts off with a massive stop, and then like when it moves a few pips in profit, it trails the stop down to like $30, which is It's fine. It is what it is. Stats on this system are as follows. Euro yen, where are you? Bollinger Band breakout. This is a system that I built with Strategy Quant. So this isn't one that I manually built on Dreamer. This is one I built on Strategy Quant. This is the equity curve over the past 8 years. Profit factor 1.38, max drawdown 0.63% with a 4.82% return over an 8-year period. 47% win rate, 47.63% win rate. You can see the average profit per trade is $60 post fees and commissions, and the average loss post fees and commissions is $39. So it has a positive risk to reward, or average risk to reward, I should say, on each trade of almost 2 to 1 with a 47% win rate. So just fantastic. Exactly what we want to see. But I'm presuming the average loss is a lot smaller, purely the way trials are stopped. I don't have many systems. In fact, I think this is probably one of 3 or one of 4 strategies that trails the stop. And it will just keep trading and keep trading. But interesting to see that the yen's gained some strength again today. Have I traded dollar yen today? I think dollar yen is my most active asset. Dollar yen's like, for algo traders, dollar yen is just an absolute dream. No, I haven't traded it. So took some profit on a silver position earlier today, this morning. Hit stop on a gold position, hit target on a NASDAQ position, and now we're in euro yen. Nothing on dollar yen, which is interesting. It's probably because it's caked it, to be honest. So all my breakout strategies have just not activated. Yeah, just looking at dollar yen on here, dollar yen USD JPY. So yeah, you can see all the previous trades on dollar yen. It's probably my most active asset. You can see that's where I turned off my portfolio, so there was no trades there. But like, which one are we looking at? Yeah, you can see it's very, very active. I would say I probably take at least 1 position per day on dollar yen. However, I think I have 7 strategies on dollar yen. How many? Where are we? Filter USD JPY. Yeah, we've got 8 strategies on dollar yen live on XAQP. So it's very, very, very active. In fact, we can probably see assets and top. Quote 141. Let's go. Nice. Assets. Yeah, dollar yen. So 31% of all my trades is on dollar yen. Huge. Gold, 19.6%. WS30, this is interesting, right? Because I traded that for like the first 2 months of XAQP. So I must have had a system that was like really active on WS30. I think I had 2. But to take 91 trades in 2 months was like, yeah, very active. But I ended up cutting those. They were both pretty poor systems. And as I built better ones, I replaced them with the better strategies. I don't trade the Dow anymore. I do trade the NASDAQ quite frequently. It feels like I've traded the NASDAQ a lot more than the Dow, but apparently not. Apparently I traded it loads in the beginning, but you can see I had a 37% win rate with a negative return on the Dow. Whereas on the NASDAQ, much higher win rate overall with a positive return. I do have quite a few systems on NASDAQ. I think I have 3 or maybe 4 systems on the NASDAQ. Great asset to trade. Love it. Risk 1% said both. So in terms of limits on how many Darwins get into gold, there is no limits. So gold will just grow over time. As the maturity of Darwinex grows, the more traders will get into gold, of course. And then there is no limit on how long it takes you to get into gold. Like I say, here's the requirements. So to get into gold, and for most people it's 20% because it's like your last year return. You need to either fulfill that or the last 2 years have done 25% return, 3 years 30% return, 4 years 35%, 5 years 40% return. So as long as you tick one of those, you can still get into gold. Doesn't matter if it takes you ages. Let me just respond to a message on Slack from Blaine. Maestro, is it illegal to tell me how many US traders are in index? I mean, no, it's not illegal. They're okay because it's a signal provider contract. I to be honest, without requesting that data from the data team, I wouldn't have a clue. I wouldn't have a clue. I don't have access. I mean, I think I do somewhere, but I don't have like immediate access to a dashboard that tells me, yeah, with the index, especially like this, that, or the other. I usually go to the index, the Darwinex Labs team or the data team to get or pull that information. I mean, yeah, and it's amazing the past week. Yeah, I mean, interestingly enough, we was in a call with the growth team yesterday, and we were talking about the index, and I was talking about how I think one of the guys asked about the index. So for context, not everybody at Darwinex trades, right? So a lot of like the trading knowledge comes from myself and some other traders that we have on the team. Like Javi, for example, the owner of Darwinex, he's a trader, so his knowledge kind of flows out throughout the business. But when we get down granular into like different teams, so for example, I'm part of the growth and marketing team, there's only me and a couple of others who trade. So we kind of help keep the team up to date with trading concepts, if you will. And somebody was asking about the index, and I was saying we usually see this sort of rally when metals are rallying. And Antonio, who heads up institutional sales for the index, actually corrected me on that. And he said, whilst you're correct most of the time, he said the rally that we've seen over the past couple of days is because of the yen more so than it is from the metals, which I found really interesting considering that silver was up like 6% every day. But having said that, I don't think silver has very many traders. Has very many active traders, at least. I know I trade silver a lot and always have done, but not many people do, which is interesting. Usually people favor gold, presumably because of the more favorable liquidity in positions. However, silver is just beautiful. It moves exactly like gold. You just get more violent, aggressive moves, in my opinion. Anyway, guys, we're going to call it an end to the session there because my little ones are home and I can hear the noise starting to rumble from downstairs. I can hear it getting a little bit louder. So I'm going to go downstairs, make some dinner for us all and have a nice family evening. So, guys, I want to thank you all for joining the session, and I hope you all have a fantastic rest of your morning, afternoon, and evening. As always, if you want to contact me, I'm always available on Discord or email. If you want to ask me any questions based on today's session, and we will always be we will also be back tomorrow at 4 p.m. UK time to do a Darwin analysis session. So if you want your Darwin reviewed, what was your name? Gasper asked for his Darwin to be reviewed earlier. We will do that in tomorrow's session. So make sure you join to take a look at all the metrics that we take a look at when we're doing a full Darwin analysis. Have a fantastic rest of your day, people, and I will catch you in the next one.